Yield. It's a word that gets investors excited. Traditionally, we think of yield as the return you get on an investment. Think dividends from stocks or interest from bonds. But what about Bitcoin? Can this digital asset generate yield too? The answer is yes, but it's not your typical yield. Bitcoin doesn't pay interest or dividends. Its value lies in its potential for price appreciation. So, how do we measure yield in the Bitcoin world? Enter Michael Saylor and MicroStrategy. Saylor, the CEO of software company MicroStrategy, has become a Bitcoin legend. He pioneered a new way to think about Bitcoin yield, turning heads on Wall Street and in the crypto world. His strategy? Using traditional corporate finance tools to acquire Bitcoin and then calculating the yield based on its price appreciation. Let's dive into how he did it. Michael Saylor is not your average CEO. While other executives were hesitant about Bitcoin, Saylor saw its potential early on. He viewed Bitcoin as more than just a digital currency. To Saylor, Bitcoin was a revolutionary technology, a digital gold, and a hedge against inflation. He became convinced that Bitcoin was the future of money. And he wasn't content with just buying some Bitcoin for himself. Saylor wanted to make MicroStrategy a major player in the Bitcoin world. This led him to develop a daring strategy, using MicroStrategy's balance sheet to acquire Bitcoin. This bold move would make MicroStrategy one of the largest publicly traded corporate holders of Bitcoin. Saylor's strategy was unconventional, to say the least. He decided to leverage MicroStrategy's financial strength to buy Bitcoin. This meant using a combination of cash reserves and, more controversially, debt. Yes, you read that right. Saylor took out loans and issued convertible debt to buy more Bitcoin. This raised eyebrows in the traditional finance world, which views debt as something to be minimized. But Saylor saw it differently. He believed that the potential upside of Bitcoin outweighed the risks of taking on debt. He was essentially betting big on Bitcoin's future. This was a high-risk, high-reward strategy. If Bitcoin's price went up, MicroStrategy would reap massive rewards. But if it went down, the company would be left with a hefty debt burden. MicroStrategy didn't just dip its toes into Bitcoin, it took the plunge. The company started acquiring Bitcoin in August 2020 and hasn't looked back since. As of today, September 14, 2024, MicroStrategy holds a staggering 152,800 Bitcoins. This massive hoard was acquired at an average purchase price of $29,668 per Bitcoin. To put this into perspective, MicroStrategy's total investment in Bitcoin is over $4.5 billion. This bold move has made MicroStrategy a whale in the Bitcoin ocean, holding more Bitcoin than almost any other publicly traded company. Section 5, Deconstructing the 17% yield, a closer look. So how did MicroStrategy achieve a 17% yield on its Bitcoin holdings? Remember, Bitcoin doesn't pay interest. The yield is calculated based on the increase in Bitcoin's price since MicroStrategy's initial purchases. Let's break it down. Since their first Bitcoin purchase in August 2020, the price of Bitcoin has risen significantly. For the sake of this example, let's say that Bitcoin's price is currently $50,000. This means that MicroStrategy's Bitcoin holdings have appreciated in value by approximately 68%. However, it's important to factor in the cost of acquiring the Bitcoin, including the debt taken on. After factoring in these costs, MicroStrategy's Bitcoin investment has yielded an impressive 17% annualized return. This is significantly higher than the returns of traditional investments like stocks and bonds. Section 6. The convertible debt play fueling the Bitcoin fire. A key part of MicroStrategy's Bitcoin strategy was the use of convertible debt. But what exactly is convertible debt, and how did it benefit MicroStrategy? In simple terms, convertible debt is a loan that can be converted into equity or company stock in the future. This is attractive to investors because it offers them the potential upside of owning stock if the company performs well. MicroStrategy used convertible debt to raise billions of dollars to buy more Bitcoin. This allowed the company to acquire a larger position in Bitcoin without having to sell existing shares and dilute existing shareholders. This strategy was a win-win for both MicroStrategy and its investors. Investors got the potential upside of owning MicroStrategy stock, which was increasingly tied to Bitcoin's price, and MicroStrategy got to fuel its Bitcoin buying spree. Section 7. The Trojan horse strategy, Bitcoin's gateway to Wall Street. MicroStrategy's Bitcoin strategy can be seen as a Trojan horse for institutional adoption of Bitcoin. Here's why. By using traditional corporate finance tools to buy Bitcoin, MicroStrategy made it easier for other institutions to follow suit. Think about it. Before MicroStrategy, institutional investors were hesitant to touch Bitcoin. It was seen as too risky, too volatile, and too different from traditional assets. But MicroStrategy's success showed that it was possible to gain exposure to Bitcoin within the framework of traditional finance. This opened the floodgates for other institutions to start adding Bitcoin to their portfolios. In a way, MicroStrategy legitimized Bitcoin in the eyes of Wall Street. And this is only the beginning. As more institutions follow MicroStrategy's lead, we can expect to see even greater adoption of Bitcoin in the years to come. Section 8. A new paradigm for corporate treasuries. Traditionally, corporate treasuries have been conservative with their investments. They stick to low-yielding but safe assets like government bonds and cash equivalents. However, MicroStrategy's Bitcoin strategy challenged this conventional wisdom. Saylor argued that holding large amounts of cash in a world of inflationary monetary policies was actually risky. He believed that Bitcoin, with its limited supply and decentralized nature, was a better store of value over the long term. This radical approach has inspired other companies to consider adding Bitcoin to their balance sheets. Tesla, Square, and Marathon Digital Holdings are just a few examples of companies that have followed in MicroStrategy's footsteps. This shift towards holding Bitcoin as a corporate treasury asset is still in its early stages, but it has the potential to revolutionize the way companies manage their finances in the years to come. Section 9. Navigating the risks, volatility, and market sentiment. While MicroStrategy's Bitcoin strategy has been successful so far, it's important to acknowledge the risks involved. Bitcoin is a volatile asset, and its price can fluctuate wildly in short periods. This volatility can impact MicroStrategy's balance sheet and stock price. When Bitcoin's price drops, MicroStrategy's stock price often follows suit. Moreover, MicroStrategy's strategy relies on a long-term bullish outlook for Bitcoin. If Bitcoin's price were to enter a prolonged bear market, the company's debt burden could become a serious problem. Despite these risks, Saylor remains confident in his Bitcoin strategy. He believes that the potential rewards of holding Bitcoin outweigh the risks, especially in a world of increasing inflation and monetary uncertainty. Section 10. The future of corporate Bitcoin adoption. MicroStrategy's bold move has sparked a trend of corporate Bitcoin adoption. More and more companies are recognizing the potential of Bitcoin as a store of value and a hedge against inflation. This trend is driven by several factors, including increasing institutional interest. As more institutional investors add Bitcoin to their portfolios, it creates a domino effect, encouraging corporations to do the same. Growing awareness. The media attention surrounding Bitcoin and other cryptocurrencies is raising awareness among corporate leaders and investors. Fear of missing out, or FOMO. As Bitcoin's price continues to rise, companies don't want to be left behind. They see Bitcoin as a potential source of growth and innovation. This trend of corporate Bitcoin adoption is still in its early stages, but it has the potential to reshape the financial landscape. Section 11. Conclusion, a legacy of innovation. Michael Saylor and MicroStrategy have made history in the world of finance and technology. Their bold Bitcoin strategy has challenged conventional thinking and opened up new possibilities for corporate treasuries. Saylor's vision extends beyond just making money. He believes that Bitcoin has the power to create a more equitable and transparent financial system for everyone. While the future of Bitcoin remains uncertain, one thing is clear. Saylor and MicroStrategy have left an indelible mark on the world. They have shown that it's possible to challenge the status quo, embrace innovation, and potentially reap significant rewards in the process. Their story is an inspiration to entrepreneurs, investors, and anyone who dares to think differently.